Hey, what's up, stock compounders? Brad here. So we are done with the 13F season. Okay, first quarter 2021 results are in. Over the last handful of days, we've seen some of the best investors in the world reveal what they bought in the first quarter of 2021. Very exciting time. So today, I'm going to show you guys, some high conviction bets from some of the gurus, the super investors that I track most closely. Okay, so we're going to look at that spreadsheet in a moment. But first, I ran a poll on my Twitter. What is the most compelling bet you've come across in this round of 13F filings? Okay. There were only room for 4 options, unfortunately, in Twitter. I didn't put Alibaba on here. I know that would probably win by a long shot. So I put the kind of 2, 3, 4, and 5 spots on here. It looks like Domino's Pizza, bet by Bill Ackman, his 7th highest conviction bet, came in number 1. 50% of you voted for Domino's Pizza. So I'll probably be doing a video pretty soon, giving my thoughts on Domino's, maybe a Domino's stock analysis type video. Not too far behind, Cowpang. Okay, I might even be butchering that name completely, but this is essentially the Amazon equivalent in Korea. Okay, and that was bet on by Lee Ainsley. Now this was actually bet on by Maverick Capital, the firm that Lee Ainsley manages, a decade ago. Okay, it was a venture capital round a decade ago that's just now becoming public. So we're going to see very soon if Lee is going to reap the rewards of that right away or let that position ride. It'll be interesting to see that. And then in third place, Danimer Scientific. They make bioplastics, biodegradable plastics. An IPO recently, I believe it was a SPAC that brought that company public. And Einhorn is betting on that one. And then lastly, Howard Marks, Chesapeake Energy. Okay, we'll get into these a little bit more in the spreadsheet. So let's dive into that now. But if you guys haven't voted on this yet in Twitter, find me on Twitter and let me know what you think about these 4 bets. So let's take a look at some of the highest conviction bets from super investors in the first quarter of 2021. Now, these aren't all of the super investors I follow. Some of them didn't have any activity, at least in the top 5 holdings in the first quarter, so I haven't included them here. These are just the super investors I follow who did some, significant activity recently. So we've got Prem Watsa. I already talked about Lee Ainsley, Einhorn, Charlie Munger, Greg Alexander. Now, Greg Alexander, many of you might not know who this is. Okay, I didn't know who this was just, maybe 3 or 4 months ago. It turns out back in, I think it was 2014 or something like that, maybe earlier, 2011, Warren Buffett gave 3 names of investors that he would like to manage his money after he dies, okay? And Greg Alexander was one of the 3 names. The other 2, Seth Klarman and Li Lu, okay? So pretty cool that we get to see Greg Alexander just within the last year and a half. He's been filing 13Fs. I don't know if it's recently that he started Conifer Management. I want to kind of understand the situation better. But it's great to have him on the list. Monish Pabrai, of course, needs no introduction. Chris Hone from the Children's Fund, the Children's International Fund. Howard Marks, again, needs no introduction. Bill Ackman of Pershing Square. And then these 2 down here, Li Lu and David Tepper, they didn't have any buy activity that was noteworthy from my perspective, but they did have sell activity that was noteworthy. So I've just included that here in the bottom section. So, right, how have I organized this? The first column here with data in it is how high of a conviction buy or add is this in the portfolio. So for Fairfax Financial, for example, Farmers Edge is the 3rd highest bet in terms of amount of capital allocated to that business. So you can see the conviction here for these particular adds or buys. Now, add just means the company was already in the portfolio as of the previous 13F, and they just added more. Buy means they didn't own it in the last 13F, so it's kind of a new position. I included the Q1 low. Now, I like to include this because, it gives me a sense, all right, I know this investor didn't buy lower than this. It's kind of the lowest they could have bought into these positions, all right? So I like to, track that just to get a sense for how big of a discount or a premium it could be trading today versus when that super investor bought it. And of course, this column is the current price as of today, May 18th. And then the delta. And this is actually how I've sorted this list. So, for Farmers Edge, the price today is 33% lower than it was in the Q1 low, which is potentially quite compelling. Okay, so that's how I've sorted these different bets from the 13F filings. Market cap, what is the market capitalization of the company? Number of shares outstanding times the share price. Gurus, how many gurus own this? So clearly at least one guru owns each of these because these are all gurus. But for a number of them, there are additional gurus that own it. For example, Facebook. I mean, that's like the most guru-owned stock out there. Google actually might have a beat because Google has two different share classes, and if you combine those together, I think it's higher than Facebook. But anyway, you can see some of these a lot of gurus own. Microsoft, Alibaba, Facebook. Although there weren't any significant buys from Facebook from the super investors that I track. This next column is insider ownership, and this is really a measure of how aligned is the management team with investors like me. Okay, are they going to make decisions that are going to transfer the benefits of the business to me as a shareholder, or are they going to make decisions that aren't optimized for shareholders? So I like to see higher insider ownership. Above 10% is kind of the threshold I like to use. You can see a lot of these. I just noticed this. It's interesting. These ones that are selling at a premium to the Q1 low just happen to be very low insider ownership. And then most of the ones that are trading at a discount have high insider ownership. That's an interesting observation. And then this next column we have, let me just refresh this, guys. The next column we have VIC. Okay, that's Value Investors Club. And I love Value Investors Club because it gives me an opportunity, not knowing anything about a company, to just dive in and read a write-up from a smart investor. What is their investment case for this business? And, you can see both long write-ups and short write-ups in Value Investors Club. For example, Alibaba. In 2019, there was both a long thesis and a short thesis, which is awesome because I really want, when I'm weighing an investment possibility, I want to hear both sides, right? I want to hear both sides from very smart investors. So in these cases where there's both a long and a short, it's awesome to be able to see both sides very, very easily. This is true for Domino's Pizza as well. Alibaba and Domino's Pizza both have long and short. So awesome resource, guys, if you're not familiar with Value Investors Club. And then here, 10-year return. So this is a column I've been playing with recently. It gives me a sense for if I had owned this company over the last decade, how would I have done? And it's maybe some insight into, does the company have kind of long-term compounder DNA, okay? It's not a foolproof metric for that, but I think it's a reasonable indicator of that. So I've been taking a look at that. And then just the last one, notes, and I'll get into these as I go through each company here. So the first one, Fairfax Financial, Prem Watsa, right? The Warren Buffett of Canada, many people call him. Farmers Edge. So this was an interesting one. It's a very small company. It just IPO'd a couple months ago in March of 2021. And essentially, it creates software for farmers, right, to farm more efficiently. So that's a very unusual type of business to get into. I'm not aware of other businesses like that, and it's surprising that such a small company would be such a high conviction bet for Fairfax, but there it is. I was disappointed in the insider ownership. Obviously, there's one guru here, right? Prem Watsa owns it. But because this company is out of Canada, it doesn't show up in 13F filings. I had to find it through Ticker Terminal and look up Fairfax Financial to see that this was a recent buy for Prem Watsa and Fairfax. So again, I'm disappointed by the insider ownership. But again, it's dropped a third in price, okay, since the low of the first quarter. So it has not done well. The IPO has not done well. It's basically on a pretty strong downward slope since it IPO'd. But, could be interesting for any of you who are interested in software, in agriculture, kind of where those two meet. Next one, Lee Ainsley, Maverick Capital. So again, Kaopang, all right? Kaopang, known as, sometimes referred to as the Amazon of Korea, South Korea. And again, Maverick bought this thing, contributed to this thing, bought in a venture capital round a decade ago for like 5% of the company. And it all of a sudden showed up on Maverick Capital's 13Fs because now it's a public company. So it was funny. I was looking at the 13Fs like, why is there like a 50% position from Lee Ainsley in this company? He didn't buy it recently like I was originally confused about. It was a decade ago, and it's just now kind of maturing that investment. So again, it'll be interesting to see if he holds on or if he's quick to kind of cash out this decade-long investment. But this is a company I'm going to dig deeper into. 61 billion market cap. So it's the 10th the size of Alibaba. 3 gurus are involved in this one. Huge insider ownership. Okay, this is awesome. I love to see this. And I got this looking at, one of the recent filings. I think I actually went to Kaopang Investor Relations and just looked through some of their recent documents and found this insider ownership number. Wasn't an easy number to find, but well worth digging for it. So that's number 2. And like I said, I'm going to be digging deeper into this one, probably through the framework of reading Nick Sleep's letters to investors, Nomad Investment Partnership, how he broke down the investment case for Amazon. And I'm going to try to apply a similar framework to Kaopang to see what I can come up with. Number 3 on the list, David Einhorn, Greenlight Capital, Danimer Scientific, okay? They make biodegradable plastics, which is awesome. That really speaks to some of my core values around sustainability. It's a number 4 conviction bet for David Einhorn, which is pretty high. And it's come down a little bit since it IPO'd via Live Oak acquisition back at the end of 2020. It has come down a little bit in 2021. So this low here is not the price. I'm pretty sure that Einhorn got in. it was probably closer to the $10 per share kind of SPAC price. I'm guessing that Greenlight got in. I don't know that. We could do more digging and figure that out. But I wouldn't assume that this low in Q1 is the price that Einhorn got in. Maybe, but I wouldn't blindly assume that. Fairly small, 1.6 billion market cap. And again, it's very early in the evolution of this business. Even though I love the vision, the mission of this company, I'm pretty sure I'm going to wait a bit and just see, if they have that DNA to really grow this thing into something. Because, it's losing money now, right? It's in startup mode. So I'll keep an eye on it, but I'm not going to dig more at this time. Again, 14% plus. I didn't actually find an insider ownership number. I looked through Ticker Terminal, the ownership tab. You can see a list of who owns it, and I just added up a couple of the top insiders to come up with at least 14% for the insider ownership there. Number 4, again, needs no introduction. I've been talking about this for weeks, it feels like. Alibaba, 3 super investors bought in. I mean, it was more than 3, but 3 that I track had high conviction bets on Alibaba. Okay, Charlie Munger, of course, Greg Alexander, and Monish Pabrai. That is a rock star list of people who bet big on Alibaba in the first quarter of 2021. You see number 3 in Daily Journal, number 1 in Conifer Management, like a 20% bet or something like that. And then Pabrai, number 5. If you look at Ticker Terminal and you look at Pabrai's international holdings, there's 9 holdings, and Baba is right there in the middle of all of those, like a $40 million bet, something like that. So it's about a 10%, maybe a little less than a 10% bet for Monish Pabrai. Okay, so it's significant, and it's down. Okay, it's trading lower today than these 3 amazing super investors were able to buy in to Alibaba. That's pretty awesome. I bought in around $227 per share. I bought in with a full position. So I'm not buying as it's dipping a little bit. But if you guys are just seeing this for the first time and you look at Alibaba, you do your homework, you decide you like the investment opportunity, it's a pretty compelling buy-in price today. Okay, so that's exciting. Anything else? Pretty high insider ownership for a company as large as Alibaba. So I really like to see that. Next one, Qorvo. Okay, this is Seth Klarman from Baupost Group. Again, one of the most revered value investors of our time. Qorvo, I don't really know what Qorvo does. Let's look it up together real quick because I want to know. Semiconductors and semiconductor equipment. Okay. So clearly Klarman has been involved with semiconductors related businesses in the past. He owns Intel, which we're going to get into. I'm pretty sure he's owned Micron. So, this is in his wheelhouse, semiconductors. And you can see over 10 years, like a 7x. Okay, so it's pretty impressive in terms of a 22% compound annual growth rate over the last decade. Could be interesting to look at. I'm not going to look at it, but for any of you guys who are into semiconductors, this could be one to look at. It's only 6% above the Q1 low, so probably pretty close to the price that Seth Klarman was adding to his position in Qorvo. Slightly under 20 billion market cap company. 2 gurus, no insider ownership, right? Virtually no insider ownership. And that 7x over the last decade is pretty strong, okay? 22%. I would love to grow at 22% a year. That's you know, that's going to make some money pretty quickly. Next one, Seth Klarman again, Intel. Okay, this is his highest conviction position, Intel. And there's been a lot about Intel from value investors recently. I mean, the earnings yield on Intel is quite compelling. I think it's close to 10%. Okay, so even if the company just maintains, it's cheap, right? It's fairly cheap. Intel is. The big concern with Intel is that they're maybe falling behind some of their competitors in terms of innovating their technology. And, so that could be the start of their demise. But if they can kind of right that ship a little bit, could be a great opportunity. What else? So, right, we're about 12% over the Q1 low. 8 gurus, so this is no stranger to gurus here with Intel. A write-up from August of 2020. Okay, so pretty recently. If you're interested in Intel, it's actually a pretty short write-up. There's not a lot of numbers. There's not a lot of quantitative components in this thesis. It's more of a qualitative analysis of Intel. Next one, Chris Hone, TCI Fund. Microsoft was added in Q1 2021, the third highest conviction position. And, Microsoft is up 16% from the Q1 low, which, it's a stone's throw, right? In what we've seen recently in the markets, we could get back down there fairly quickly, down to the Q1 low. Microsoft doesn't compel me much for whatever reason. There's a lot of gurus who are in it. It's very big. Well, I think it's the maybe the third largest company in the U.S. behind Apple and Amazon. So I don't know. I probably have biases against it because of its size. Also because it has such a low insider ownership. Okay. And just for reference here, Amazon is bigger than Microsoft, but the insider ownership of Amazon, I'm pretty sure it's over 10%. Okay, so I'm not going to give Microsoft a pass for insider ownership just because it's so big. You can see there's a bit of a dated write-up for Microsoft almost 3 years ago. But if you've held Microsoft over the last decade, you're right at that 26% compound annual growth rate where you're doubling your money every 3 years. Okay, that's kind of Pabrai's magic growth rate, 26%, or a 10x in 10 years. So you can't argue Microsoft has been a great performer, at least in the last decade. Next one, Howard Marks, Oaktree Capital. Okay, master of distressed debt. And of course, Chesapeake Energy recently emerged from bankruptcy just in February of 2021. So there's a reorganization of the company. This is the third highest conviction bet in Oaktree's equity portfolio. So very high. I don't have any idea what Oaktree bought in at. It was probably lower than the Q1 low. You might be able to tell reading some of the recent filings from the SEC where Oaktree was able to buy in. But that's up 24% since the Q1 low. So it's performed very well over the last quarter. And this really isn't my wheelhouse, either energy or restructurings, bankruptcies. So this one's an easy pass for me. In addition to the insider ownership, just non-existent. But there's the most recent write-up for Chesapeake Energy on Value Investors Club just from 3 months ago. Must have been right when it was coming out of bankruptcy. So check that out if this is an area of interest. And I put this 0x 10-year return. Yeah, it's a little bit cheeky, but if you had bought this 10 years ago, I'm guessing you're wiped out as an equity holder. It's possible that you got something, but I think the vast majority of the time when a company goes bankrupt, the shareholders don't see a dime. So there's that. The last one on the list, on the buy side, Bill Ackman, Pershing Square. Okay, again, needs no introduction. Now, Domino's Pizza wasn't one of the top 5 bets for Bill Ackman. Let's just take a look here at what Pershing Square has going on. So these are the top 5. Domino's Pizza is 7. Okay. This was a buy in the first quarter. Now it's giving the latest update, which is showing just a 0.2% add from the 13G filing. Must be because Ackman is over a 5% beneficial owner of Domino's Pizza, and he bought a little extra recently. But this is a new buy, okay, fresh buy in quarter 1 2021. At about 8% of the portfolio. So, it caught my eye because I remember Monish Pabrai talked about Domino's Pizza at one point as he was going through this framework he had for great businesses that need great management. Okay, there were like 5 different buckets that Pabrai was looking at opportunities through, and one of them was great businesses that need great management. Okay, the first bucket was great businesses that an idiot can run. Domino's is not that business. Domino's needs great management, but it's still a great business. So look at this. Over the last decade, 18x on Domino's. Domino's has this incredible long-term compounder DNA. Okay, the question is, does it have it from here, from being a $17 billion market cap company? All right, does it have it from this point moving forward? And it's up quite a bit. I mean, look at that, 32% from the quarter 1 low. Okay, so it's really rebounded quite strongly. Again, not much to say for insider ownership. There is both a long and short write-up if you want kind of both sides to the investment case. A little dated from 2 years ago, but not too bad. When I saw Domino's, I got curious because when I think of Domino's, I think of delivered in 30 minutes or less, or it's free. Okay, now I got curious, are they still doing that? So I went to their website. Slowly but surely. See, this is where I cultivate patience as a value investor when I'm trying to load Domino's website here. So our guarantee, okay, if you are not completely satisfied with your Domino's Pizza experience, we will make it right or refund your money. So it looks like they've done away with the delivered in 30 minutes or it's free guarantee. So that was a little disappointing to see. I don't see that anywhere on their homepage. So maybe not as powerful as powerful of a compounder as it used to be with that incredible guarantee. I don't know. Remains to be seen. I don't buy Domino's Pizza. I don't get excited about Domino's Pizza. But this is pretty exciting. 18x over the last decade. So, and clearly from that Twitter poll, I just closed it out to open the Domino's page, but you guys were most interested in Domino's out of the 4 I listed, probably right behind Alibaba. So maybe I'll do a deep dive on Domino's as well. So again, the 2 big sells from quarter 1 of 2021. Li Lu, he didn't do any buying. According to his 13F, he sold 40% of Facebook, okay, which was a little bit surprising. Let's look at, we're going to go to Dataroma. and look at Facebook. I want to see what the activity was in Q1 for everyone who owns this. So you can see there's just a ton of super investors who own Facebook. Pat Dorsey added 22% to Facebook, and that's a huge position for Pat Dorsey. Big reduction for Li Lu. Pretty big addition for Stephen Mandel. So it's really all over the place with Facebook. So yeah, there's that. I used to be interested in Facebook. There was a part of me that was kicking myself for not buying Facebook last March 2020, when it really crashed, and it was in my buy zone. Okay, I had a price in mind for Facebook. I think it was like 160, and it dipped below that, and I didn't buy it. Okay, and you know, the more I think about Facebook, think about the investment case for Facebook, think about how Facebook is viewed by its users, by the greater market, I'm not as bullish as I used to be on Facebook. I mean, WhatsApp, for example, I've switched over to Signal. I don't really use Facebook to connect with people. I don't use it as a social network, really. I use Twitter, YouTube, Instagram, which, of course, Instagram is owned by Facebook, but I don't even use Instagram very much anymore, other than some of the messaging features within Instagram. So I've become much less bullish on Facebook, even though by a lot of value metrics, it looks cheap, particularly compared to some of these other high growth tech companies. Okay, but you know, seeing Li Lu sell off, it kind of reaffirms, you know, my waning interest in Facebook as an investment. Which isn't to say, you know, that there aren't plenty of reasons to be bullish on Facebook. I'm sure there are. My personal experience, I'm just using it less and less. It's becoming less valuable to me over time. Of course, over the last decade, Facebook has been great. It's 10x'd in the last 10 years for that magic 26% compound annual growth rate. And still, you know, a very healthy insider ownership figure for Facebook. So that's definitely a plus. And then the last one, David Tepper, selling Alibaba, 40%. Okay, big trim, a big cut on Alibaba. So let's take a look at Baba from the perspective of what happened with all of these super investors in Q1. And I actually, I posted this on Twitter, this image here of, you know, who owns Alibaba. And I posed the question, can all of these investors be making rational, intelligent decisions about Alibaba in the first quarter? You know, you've got massive buys from Charlie Munger, massive add from Greg Alexander and Monish Pabrai, big reduction from David Tepper. You know, it's mostly buys, but there's some sells, right? This wasn't a significant position for Lee Ainsley, so that doesn't count for so much. But David Tepper, I highly respect as an investor. So it's just interesting. It's interesting to think about, you know, is it possible for all of these investors, at least the top 4 or 5 that have somewhat high conviction positions, thinking rationally and intelligently about the same business, making very different decisions. And of course, Ray Dalio isn't tracked by Dataroma, but I believe he made a fairly significant cut to Alibaba as well in the first quarter of 2021. So I think that's about it, guys. Let me know in the comments which of these high conviction bets from the first quarter you're going to dig deeper into, or maybe you've already bought one or more of them. Let me know in the comments how the latest round of 13F filings is influencing you in terms of what you're spending time getting to know better or actively buying and maybe even selling. Okay, let me know in the comments, and I guess that's about it for today, guys. Thank you all for paying attention here. And Rule 1 fund, right? Phil Town. We may not see that until the end of next month. Okay, I'm prepared to wait that long. If I have to wait any longer, I'm going to Atlanta, and I'm going to find Phil Town, and I'm going to, buy him a beer and say, okay, what have you changed? What have you bought and sold in your portfolio? Hopefully that works. I don't see why that wouldn't work. But hopefully that's coming up soon. I know you guys really enjoy updates from Phil Town's portfolio. And yeah, that's all I got for today, guys. Hope you enjoyed it. If you enjoyed it, smash that thumbs up. And I will see you all in the next video. Take care.